George Tsilis, senior markets correspondent here. George, we're talking Carvana. I like talking about this one, George, because I shake my head when I look at that chart sometimes, up 149% year to date as we speak. And Needham comes out, gives it an upgrade. Like I said before the break, where were they in the last 6 months? Because this thing's been a rocket over the last year, up 240% over the last 12 months, George.
Yeah, I mean, yeah, right. So looking at last year, it's up 240%, and everyone really focuses on, NVIDIA and all the high flyer, large cap companies. But, this has been a stealth mover. And in fact, if you go back and look over the past 5 years, the stock hit a low going back to late 2022, close to $4. This has been a remarkable, I would say, turnaround story for Carvana, which if you go back to that time period, the company market capitalization was only about $300 million, and they had about $6 billion in debt to service. And, I even thought that this company wouldn't make it, but they did. And in fact, what they ended up doing was doubling down. They didn't actually look to cut expenses. They actually went out and bought a data analytics firm, but they also bought ADESA. And this is essentially Carvana moving, not just expanding in the retail space, which again, there was margin challenges, but ADESA essentially gave them access to the wholesale market. And with that said, they've actually improved unit economics substantially. Now, I'm going to give you some numbers here just to give you some context, because if you look at 2022, the company essentially lost about $1.6 billion. And you go back and look last year, or for the full year of 2023, they actually made about $600 million. And on a per share basis, this is where it's remarkable. The company's stock price is around $4 in late 2022. They were losing close to $16 a share. But fast forward last year, they actually are making profits on a GAAP basis of 75 cents. So it's been a remarkable turnaround. I think what's happened here is the sales volume did continue to move higher in 2022, but sales have actually declined. But the unit economics have improved substantially because of the wholesale division of ADESA. I think that was a game changer for Carvana, not to mention competition, Vroom, Shift, they went bankrupt. So this became a story of, digital sales, delivery, which is very expensive on a per unit basis. They've expanded their retail front. They're competing aggressively with, mainstay retailers like CarMax, and you add in their own in-house reconditioning and wholesale level business with ADESA, and they're improving margins, even though volumes may not necessarily be as robust as they were going back to 2021, 2022, right after the pandemic or during it. But that's okay because the profit margins have improved substantially.
George, we were just talking about interest rates and how stable interest rates seem to be helping the stock market. Well, this company struggled when automobiles, via supply chains, via chip shortages, when that market was volatile. They had trouble navigating those rough waters, but now the used car business is back to calm. And just like Jamie Dimon, when asked, do you want high interest rates or low interest rates? He said, I want stable interest rates. Well, this company is back because of stable car prices. They can move, but they're less volatile than they were. That allows them to get back to doing the business that made this stock, such a high price stock all the way down to $4. I think stable is what they're looking for.
That's exactly right. Because, if you just go back and think about what happened, Carvana was susceptible to tremendous price risk because they were acquiring, units at high price levels, and they were hoping, of course, resell them at even higher prices. Well, what ended up happening is as prices started falling, they got caught with a lot of inventory at high prices and couldn't resell them. So rather than just capitulating and saying we're going to focus on debt, they issued a lot of equity, and they actually bought a wholesale division, ADESA. And so they aren't sensitive to wholesale to retail price risk. As prices have fallen, they ended up cheapening up the inventory they bought, and they kept profit margins higher. And I think this is, again, like I said, I use the word remarkable because if you just consider the stock price movement from $4 to where it's at right now, I think it's like 2,500%. And like I said, they went from losing so much money to now profitable, even though sales last year were down from around $13 billion in 2022 down to about $11.5 billion in 2022. The unit economics improved significantly, and that's why this story is one in which there's a turnaround.
Yeah, they've got earnings at the end of the month. We'll get some more clarity on these numbers because CarMax's numbers one of its competitors were dismal. All right, thanks to George Tsilis, senior markets correspondent here, helping us break down Carvana in the up.